Welcome to InvestorHubX.com. Most traders think triangle patterns predict the future, but they don't. Triangles don't tell you where price will go. They tell you where pressure is building. In this video, we're going to look at what an ascending triangle is, what a descending triangle is, what a symmetrical triangle is, what a busted triangle is, and multiple strategies for trading triangle patterns. Let's begin. Let's begin with the ascending triangle. At the top, price forms equal highs, creating a strong resistance level. At the bottom, price forms higher lows, showing increasing buying pressure. This creates a compression zone. While the ascending triangle is often seen as bullish, it is not truly bullish or bearish until the breakout happens. A break above signals continuation to the upside, but a break below can signal a reversal. Now let's look at the descending triangle. At the bottom, price forms equal lows, creating a strong support level. At the top, price forms lower highs, showing increasing selling pressure. Sellers are stepping in earlier, each time price tries to move higher. This creates a compression zone. While the descending triangle is often seen as bearish, it is not truly bearish until the breakout happens. A break below signals continuation to the downside, but a break above can signal a reversal. Now, let's look at the symmetrical triangle. At the top, price forms lower highs. At the bottom, price forms higher lows. The range gets tighter and tighter. This is compression. Buyers and sellers are reaching equilibrium. The market is not choosing a direction yet. And this is where most traders make a mistake. They try to predict the breakout. But the truth is, the symmetrical triangle has no bias. It only tells you one thing: a big move is coming. If price breaks up, momentum follows. If price breaks down, momentum follows. Your job is not to guess. Your job is to wait. Now let's look at the busted triangle pattern. A busted pattern occurs when price breaks out of a triangle, but fails to continue in that direction. Instead, price reverses and moves back into the pattern, invalidating the breakout. For example, in an ascending triangle, price may break above resistance, suggesting a bullish continuation. However, if the breakout fails, price can quickly reverse and move lower. This traps traders who entered on the breakout. As they exit their positions, it adds momentum in the opposite direction. This often leads to a strong move against the original breakout. Now that we understand the triangle pattern, let's look at a strategy you can use. The first strategy is the breakout and retest. This is a descending triangle. It forms with a horizontal support level, while each high is lower than the previous one. When price breaks above the triangle, it signals a potential trend continuation and a possible trading opportunity. After the breakout, price often pulls back to retest the previous resistance level, which was the highest point of the triangle. At this stage, you want to observe the price action. If you see multiple candles with long lower wicks, it suggests strong buying pressure. This creates another high probability trading opportunity. The second strategy is to combine triangle patterns with key levels. Using key levels from a higher time frame significantly improves the quality of your trades. Why is that? Because now you have two groups of traders focusing on the same level. You have traders watching the triangle pattern and traders watching the higher time frame support or resistance. When more traders are involved at the same level, the reaction tends to be stronger and more decisive. This is a symmetrical triangle. At this point here, we can identify a key support level. When price drops into this zone, we look closely at the price action. If we see a long wick hammer candle, It suggests strong buying pressure and rejection of lower prices. Then, when price breaks out of the symmetrical triangle, it presents a high probability long trading opportunity. If you find this helpful, please visit investorhubx.com for more lessons just like this. We are building a complete learning platform designed to help investors like you master technical analysis, stocks, cryptocurrency, commodities, precious metals, property investing, and more, step by step. You will also get access to custom indicators and in-depth video courses to support your learning journey and take your skills to the next level. In this lesson, we've covered the key types of triangle patterns: ascending triangle, higher lows with a flat resistance; descending triangle, lower highs with a flat support; symmetrical triangle, converging highs and lows; busted triangle, when a breakout fails and reverses. We also explored two practical strategies: breakout and retest, combining triangles with key levels, also known as confluence. It's important to understand that triangle patterns are not inherently bullish or bearish. They do not predict the future. Instead of trying to predict direction, always wait for a confirmed breakout. Observe price action at key levels. Look for signs of strong momentum or rejection wicks. Only then should you consider entering a trade. If you found this lesson helpful, please give the video a thumbs up, subscribe to the channel, and turn on notifications for future lessons. I'll see you in the next video.